Good morning and good evening, everyone. Thank you for being here. My name is Drogon, and I'm the head BD at HMX. Today, I'll be presenting about HMX and how we're unlocking the potential of decentralized perps trading. So first, we'll start with the 101 and cover some of the basics of perpetual tradings for some of those who might not be familiar. Um, Perpetual tradings typically refers to perpetual contracts, which is a type of derivative products popular in the crypto markets. And these contracts allow traders to speculate on the price movement of assets without actually owning them. And unlike traditional futures contracts that have specific expiration dates, perpetual contracts are designed to be perpetual, meaning they do not have a predetermined expiration date. Traditional futures contracts usually have fixed expiration dates after which the contract settles, requiring either physical delivery of the underlying assets or cash settlement. And this time frame can range from weeks to months, depending on the contract. And in contrast, perpetual contracts, as introduced by platforms like BitMEX, don't have a set expiration. They're designed to closely track the underlying asset spot price, and the structure allows them to continue indefinitely, hence the term perpetual. The structure enables traders to maintain positions without being constrained by expiration dates, offering flexibility for long-term holding or short-term trading strategies without the need for contract rollovers or renewal. And the absence of an expiration date in perpetual contracts means that traders can hold the positions for as long as they desire, provided they manage their margin requirements and accounts for funding fees or other mechanics used to align the contract's price with the underlying asset's market value. And a little brief history of perpetual trading. The concept was pioneered in 2016 by BitMEX and our godfather, Arthur Hayes. Then, in early 2021, during the latest bull market, perpetual trading gained significant popularity given that it allowed users to trade with high leverage and users only needed to manage the margins of their trading positions and not the expiration date, which made managing the trades much more convenient. As we all know, degens only like to go big or go home, and perpetual trading allows them to easily do that. You'll see an uptick in the perpetual trading activities, which was led by two centralized crypto exchanges in FTX and Binance due to their superior user experience, low fees, and many asset listings. Perp volume over spot volume, which is on the right y-axis here, keeps growing, even though the overall volume across the crypto markets decreased as we approach the end of the bull market. As you can see, perpetual trading continues to grow against spot trading, signifying that the product is gaining more and more popularity. The introduction of funding fees has led to the emergence of diverse trading strategies customized for perpetual contracts. And these include scalping, funding rate arbitrage, and hedging techniques, which entice a wider array of users to participate in these markets. And then this happened. As sad and as much as I hate talking about this incident, it's a very important incident for our industry, and it's one of the biggest inspirations for our team at HMX. And it's one of the reasons why we created HMX in the first place. So, as we all know, the industry witnessed FTX, a major centralized exchange, facing insolvency following the misappropriation of customer funds by its management team. And this event sent shockwaves throughout the industry, highlighting the vulnerabilities of centralized exchanges and the potential risks. It really emphasized the pressing needs for decentralization in managing crypto assets, prompting a critical reassessment of the not your keys, not your coins principle. And the hard lessons learned here in this unfortunate incident resonated deeply within the community, reinforcing the importance of personal asset control and the risk of entrusting funds entirely to centralized entities. Here, the fallout from FTX insolvency compelled many to reconsider their approach, emphasizing the significance of decentralized solutions and the preservation of control over one's assets in the cryptocurrency space. An evident surge in trading activities within decentralized perpetual exchanges coincided with the beginning of the 2021 bull run. The trading volume, representing activity levels, notably escalated starting in Q4 last year, marking a significant uptick in decentralized perpetual exchange activities after the FTX collapse. Observing the fees generated by these perp DEXs, a parallel increase was evident. This trend suggests a growing recognition within the industry for a pivotal role played by decentralization. However, when we look at both the spot and derivative trading volume, we find that there's a significant discrepancies. Centralized exchanges hold a dominant position in spot trading volume, with DEXs consistently contributing to around 15% of the total spot volume, except for an outlier in May 2023. So as we can see, more and more people are becoming aware of the importance of self-custody here. However, when we look at the derivatives trading volume, we found that centralized exchanges dominance is further emphasized, where DEX accounts for less than 2% of the total trading volume in derivatives. As an industry, the perp DEX industry, we still have a lot of room to grow. And why is that? Why is the volume so low compared to centralized exchanges? Well, we have identified three main problems. And when we first launched HMX, while we have seen a strong adoption of pool-based perp DEXs, key pain points associated with using them remain. First, single collateral and restricted collateral type. Initially, users are confined to holding collateral in stablecoins or the assets they trade. This compels conversions of holdings into these assets, limiting diverse strategies like the carry trade commonly facilitated by centralized exchanges. Secondly, pool-based perp DEXs users face limitations with isolated margin positions. This restricts capital efficiency, risk management, and financial flexibility, as margin balances cannot be shared across multiple positions. This also complicates user experience, which requires individual collateral management for each position, creating friction in position management. Third, high trading fees versus centralized exchanges. LP-based DEX often impose relatively high trading fees for opening and closing positions. And these higher fees come for a reason. Right? They aim to offset risks for liquidity providers or LPs and cover the opportunity cost of tying up their capital, serving as an incentive to attract and compensate LPs. So when we were building HMX, we made sure to address all three of these main pain points that we have identified. So some of the features I want to highlight, and these are some of the main features that set HMX apart from our competitors. We have cross margin. So users can share margin balances across multiple positions to maximize capital efficiency for traders, right? Especially during periods of market turbulence. We allow for multi-collateral support. So traders can use BTC, ETH, or even yield-bearing assets like WST ETH by Lido and many other assets as collateral for trading, allowing users to effectively implement many trading strategies. And we're always open to accepting new collateral. So if you have any ideas, please feel free to hit us up and let us know what you want to use as collateral. We have very low trading fees. So for BTC and ETH, our fees are actually comparable to Binance and some of the largest centralized exchanges in the world. If you think 4 bips is already quite low, you'll be in for a nice surprise. Christmas will come early for HMX traders. That's all I will say for now. We also allow our users to trade crypto, FX, and commodities. So you can access many markets using HMX. We allow retail users to become market makers and profit from both platforms' trading fees and traders' P&L. we have a feature called leverage market making, where LPs rehypothecate GMX liquidity to market make both on GMX and HMX, maximizing real yield generation and capital efficiencies for the LPs. Another area where perp DEX still cannot compete with centralized exchanges is the mobile trading experience. Let's face it, a lot of traders like to trade on the go, and we put in a lot of effort at HMX to make sure that the mobile trading experience on our platform is as seamless as it can be. Our PWA, or Progressive Web App, creates an app-like experience for mobile users and traders. I encourage all traders who are used to trading on centralized exchanges on their phones to give HMX a shot. I'm pretty confident you'll be very impressed. We also implemented velocity-based funding fee, where it's one of the many ways that we protect our HLP depositors or our LPs, as it helps balance the OI. So for example, when more traders are going long, we incentivize traders to come in and open short positions and earn funding fees. This has really set us apart as traders can execute new strategies like carry trades. We're also one of the first platform and perp DEX to implement account extraction, or AA. So now our users can have a one-click trading experience similar to those experience on centralized exchanges. Fund security and self-custody should be a given and not a nice to have. Users shouldn't have to choose between a nice experience or fund security, and HMX gives you both. We offer what centralized exchanges can offer and beyond. HMX vision, our goal is to become a perp DEX in a DEX where that can offer experience that is similar to those of centralized exchanges. And these are some of the things I want to highlight today, and I've already touched on some of them in the last slide. But at HMX, we allow for multi-asset collateral support, cross-margin, self-custody, on-chart trading, sub-account support, decentralized solution, API integration, and we also just released our Python SDK. We also have mobile application, or PWA, as I mentioned. Our ETH and BTC trading fees, as you can see here, is very competitive. I put in the trading fees for some of the centralized exchanges, some of the largest ones, and as you can see here, 4 bips is extremely competitive. We also offer instantaneous order execution, so our traders can execute the orders within 2 to 5 seconds, which is unheard of in this space. We have permissionless access, so anyone, anywhere, from wherever you are around the world can access and trade on HMX. We also offer FX and commodities trading. Here are some of the stats I want to highlight since our public open beta launch in June this year. In terms of TVL, we have around $29.8 million US. We have served over 5,000 unique users, 3,300 unique traders. We have over 3,000 HLP depositors, or LPs, and we have supported over 100,000 trades. And the last 7-day average OI on our platform is around $33.5 million US. In terms of HLP, or our pool, where LPs can come in and provide liquidity and market make, we have $26.3 million US in TVL. We have listed 27 assets for our users who trade. We have over 12,000 GitHub commits. And this is one of the things I'm quite proud of, and the team is quite proud of, is that we have made over 230 front-end updates. In terms of total trading volume, we have done and facilitated $6.6 billion US. In terms of community members, we have over 9,000 unique community members across Discord and Telegram. In terms of our token, we have over 2,000 HMX holders. And then the stat is the one that our team is most proud of. The total revenue distributed to our users is over 2.8 US dollar, 2.8 million US dollars. Of course, we can't do this alone. So HMX boasts over 6 protocols in our ecosystem, including Pyth. Pyth is our exclusive Oracle service provider for HMX. Pendle, we have integrated the HLP pool for fixed rate earning and yield trading. Stellar, or formerly Alpha Finance, allows for leverage yield farming pool on HMX and ETH pair, which is our main pair for liquidity. Volca allows for leverage yield farming vault on HLP pool. And then PenPy and Equilibria, they're built on top of Pendle to bribe admissions to Pendle HLP. So what's next for HMX? Well, in Q4 this year, we have made a lot of UI improvements, and this is definitely one of the things that we continue to focus on as we realize how important it is in terms of our users. As much as we have made, we're going to do customized UI skins for NFT holders. We just launched our ladder page, which is live now. We're going to have a market page. We're going to allow our users to export trade history in the form of CSV, which is actually something that not a lot of perp DEX allows users to do. We're going to revamp designs, and we're going to allow our users to auto compound USDC rewards. Okay, here are some alphas for those of you listening. So as much as we love Arbitrum and the pool-based perp DEX model, we know there's still a lot of users out there who HMX currently don't meet their needs. That's why we have significantly expanded our team over the past couple of months, and we're currently working on HMX v2, which will be our biggest product release yet. Again, I'll repeat that statement. As much as we love Arbitrum and the pool-based perp DEX model, we know there's still a lot of users out there who HMX currently don't meet their needs. And again, Christmas will come early for HMX traders, so stay tuned. And of course, last but not least, we have to thank our amazing partner, Pyth Network. Since we started building last year, Pyth has always been by our side and is one of the best partners we could have ever asked for. The low latency Oracle solution perfectly meets our needs as a perp DEX. The flexibility in Pyth's architecture allows us to further optimize gas usage, significantly reducing costs for users and enabling cross-margin multi-asset collateralization to be fully implemented on-chain. The first ever on-chain customized index market by HMX was powered by Pyth. And one of the stories or things I want to highlight to showcase the amazing work and support that the Pyth team has given to us at HMX is when we asked the Pyth team to list meme tokens price feed, and they immediately made it happen within a couple of days and supported us through the whole process. Simply put, we wouldn't be here without Pyth. Hashtag powered by Pyth. Thank you so much for your time, and I hope you get to check out HMX and have a limitless trading experience that we hope to offer to all of our users. Thank you.